What I'm talking about this morning is the act that was passed, I guess, about 4 weeks ago now, right at the end of December. And the act is part of the government's budget for the new year. So it's a 6,000-page act, and a small section of it has to do with coronavirus and support for businesses. So I'm just concentrating on that piece of it. I threw my agenda in here. It was just to organize myself, but I'll be talking about some PPP, Families First, forgiveness, retention credit, and grants that are available. All right, so first off is the forgiveness process of the PPP. As you mentioned earlier about being proactive, I've been keeping up with Congress way too much, way back since March. And since the CARES Act came out and PPP and forgiveness, Congress has been trying to make it easy for businesses to file for forgiveness. They did open up the forgiveness process last October. And my suggestion, anyone that asked me, any client that was looking for information or reports, I was saying, do not file for forgiveness. There's no trophy for first place. There's no rush. Just don't do it, because I knew something was coming. And in this act, it is now here. If your loan is less than $150,000, I've been using this term lately, I took it from the car dealers, sign and drive. That's basically what the process is. It is a really short application, and I'll show you on the next page. That just came out on the 19th, this application that I'll show you. It's going to take banks some time to now put this in place. So if you were to run off to your bank today and say, hey, I'd like to file for forgiveness, I heard, it's simple, they're probably going to put you through the torture of the old application, because that's what they still have in their system. So again, if your loan is less than $150,000, you want to see that this is the application the bank is providing to you. And this is it. There's not really any math involved. It's just, put your loan number, how much did you get? Your bank will most likely pre-fill all this information in for you, so you shouldn't even have to fill in that. And just simple, how many employees did you have at the start when you applied? How many do you have now? It's not full-time equivalent. There's no math behind it. It's just, how many employees did you have? Your covered period, so your bank is going to fill that in most likely also. And then down here at the bottom, how much are you asking for forgiveness? So even though this is a very simple application, it's not an automatic forgiveness. You still have to spend your funds accordingly, with the 60% on payroll and on accrued costs. But so it's possible you may qualify less for forgiveness, but I suspect everyone's going to put the amount for forgiveness as the same amount as your loan. The bottom part of that application, you are making.
Can I ask a question?
Yeah.
On the top of the application, it said expiration July 31st.
Yeah.
Is that the time that you have, or is that?
Yeah, so that is simply a form expiration. That's not a deadline. All that means is by that date, the SBA is going to come out with a new updated application. It may look exactly the same.
Okay.
And in fact, this application, the 3508S, this came out, I think it was in November, and this is probably the 6th variation of this form. They keep updating it, making it simpler. So I suspect by the time we get to July 31st, this is going to even have a few more variations.
Okay.
If you want to know the deadline to apply, what your loan document says is you have 10 months from the end of your covered period before you have to make payments. So if you never want to go through having to lay out $1 on this, your deadline is 10 months from the end of your covered period. At that point, you'll have to start making monthly payments based on the loan amount, 1% interest. Your technical deadline is the life of your loan period. So that, I believe, is 2 to 5 years if you look at your agreement. So again, so that's why I was saying there is no rush. Even if you got your money like in early April, your 10-month period is not going to start until April of this year. So we still have a few months ahead of us. As I said, you're still required to spend the money on approved costs. So one of the certifications you make is, yes, I spent the money on payroll and rent and utilities. And they also want you to sign that you didn't lie and misstate anything. And that's it. You don't have to supply tax returns or copies of receipts or checks or payroll registers, nothing. It's 2 initials, some information at the top, and your loan is forgiven. Now, in this act, there are more expenses you can use towards forgiveness. So up until last month, we all knew payroll costs, mortgage, rent, utilities, and that was it. Now there's certain operations, expenditures, property damage. So if your business was unfortunately in an area where there was rioting and looting, those property damages are forgivable expenses. And even if these damages were outside of your covered period, you can still claim them. Supplier costs, PPE. So if you had to make modifications to your business, you installed plexiglass dividers, you bought gear, gloves, masks, those types of things for your employees. All those are now expenses you can use towards forgiveness. So if you didn't quite spend all of your money on the first round, there's some new things that you can use to try to get that 100% forgiveness. This screenshot is off of the 3508EZ application. So if your loan is more than $150,000, then your application does want each line item. All right, so with PPP, we now, if you are small business, you've all heard the news, there is now a second draw. It opened earlier in January. It initially opened to small community banks. They wanted to give those small banks and small businesses a head start to jump in on this. And then a week later, I think it was on January 12th, yeah, then it opened to all banks. So some banks are not participating. So if your bank is not open, you have to look for another bank or fintech. The terms are the same as the original, so 2.5 times your average monthly payroll. You can use 2019, so technically you can get the same amount as you got the first round. If for some reason your 2020 payroll was greater, you can take 2.5 times your average for 2020, but for most businesses, your bigger year is 19. And they did make some conditions. 300 or fewer employees, 25% or more decline in revenue for any quarter in 2020 compared to 2019. And you must have spent all of your first round money. You know, they don't want to give you more if you haven't spent the first, but I don't see anyone who probably hasn't spent the first round yet. And funds are available until they run out. And on my next slide here, there we go. $284 billion is available. It is less than what was available on the first round, and that ran out in 2 weeks. I got an update as of Tuesday of this week. They've already given out 35 billion, 400,000 loans. And it's really good to see that the majority of loans were small amounts. So that, you know, certainly shows that the small businesses are getting this funds and not, you know, Roots Chris and these major public corporations. So now, talking about restaurants, if you are in food service or accommodations, so hotel, motel, bed and breakfast, restaurant, if you touch food or you touch a bed, you're probably under the industry code 72. And the advantage for you is instead of getting 2.5 times your average payroll, you get 3.5 times. So they're giving more money to those industries that are more needy than the others. I've been keeping an eye on the chat. I don't know if there are any questions that come up, but if you don't want to interrupt me, you can throw it in the chat and I'll try to glance over at that every once in a while and catch any questions that are in there. This is another piece that I've been watching since April, and I kind of knew it was coming out. Back when the CARES Act came out, Congress said that the funds that were forgiven were not taxable. So normally when you have debt that is forgiven, the IRS looks at that and says, well, forgiven debt is just as good as someone giving you money. So it's income. So in the act, Congress said, no, that's not going to be the case. I think it was just about 2-3 weeks later, after the CARES Act passed, the IRS came out and said, yeah, that's right. We won't tax you on forgiven debt, but all those expenses you paid were with someone else's money. That's with government money, and you can't deduct that for income tax purposes. Which, you know, if you look at it on the other side, basically it turned into taxable income. And the CA Act that was passed, Congress got in there that, you know what, our intention was this is not to create any sort of taxable income at all. We said on the income side, but we didn't realize the IRS was going to come around the back and hit you on the expense side. So that is cleared up now. You deduct your expenses as if you paid them. So that would have caught a lot of people by surprise. You know what? This I threw this in here and I should have put it up earlier in the process. It's starting with a couple of weeks ago. I had a number of companies calling in to us in a mad rush to get their loan forgiven, the first round. They're like, we need to get all these reports. I need to file for forgiveness today because I need to submit my application for a second draw loan. And I responded with, I don't know what you're talking about. That doesn't make any sense. That is not a requirement. I had one of them forward to me the email that they received from their bank, which was Bank United. And then I started having more companies reach out to me with these requests, all with Bank United. And what Bank United was doing first of all, their system was down, but that was not the point of this. But down here, the bank was telling their clients that they need to apply for forgiveness on the first loan before they can get the second loan. And they made it look official. They even put a link to the IRS website that supposedly had this language. I read through the 65-page document 3 times, and I could not find it was true. I put a lot of inquiries. I put posts out there to social media tagging Bank United, and finally a week later they responded to me and said, oh yeah, we did not have that correct. So just because your bank is telling you something, don't think it is correct if it disagrees with something or something you've heard somewhere else, because banks do make mistakes. So just to reiterate, there is no requirement to file for forgiveness on the first loan before you can apply for the second loan. The misstatement here, how they mistranslated it, is you have to apply for forgiveness on the first loan before you apply for forgiveness on the second loan, or at the same time. So it's just in the forgiveness application. They want you to go in order. They're not going to forgive the second loan before they forgive the first one. So, all right. So with PPP out of the way, another big part of the CA Act was the FFCRA, or Families First. This act came out very early in the process, back in March, that allowed our employees to go out on federal sick leave. We pay the employee for being out on leave, and the government would give us a tax credit to make us whole. So basically, government paying for that sick leave. According to the original act, that expired on December 31st. So this act came in, and it's a little weird how it's worded. They extended the tax credit, but they did not extend the mandate. So in essence, how that translates is, up until December 31st, if an employee was out, they tested positive, they're out for 2 weeks, you were mandated to pay that employee. Otherwise, you can face FLSA minimum wage violation. So you pay the employee. From January 1st, you are no longer required. It's optional for you to offer this leave to your employees. But you still get the tax credit for it if you do. So kind of as I have here, why not offer it? If the government is giving you money and you're helping your employees, and more importantly, you're keeping them at home and not needing to come into work to get paid, do this. It does expire March 31st, so that's when this extension is through. It did not reload any time for your employees, so the employee basically gets 2 weeks from when this started up until the end of March. So if they were already out for 2 weeks, they don't get any more. Right. Now, this is probably the biggest thing I found in this act. The employee retention tax credit. This came out in the CARES Act. So it's been around for a while, but you were not allowed to do both. You couldn't do the retention credit and the PPP at the same time, and most people all went for PPP. What this act did was it allows you to do both. You have to meet one of these 2 conditions, and we're going to talk about each one of these a little further, but if your business meets one of these 2 conditions, you can get up to $19,000 per employee. And that is huge, and we'll talk about this. I find that there's not a whole lot of press about this. Not a lot of companies know about it. I've been trying to educate our clients as much as possible about this. So hopefully you're able to. This credit is for all, for-profit businesses. Nonprofits are also eligible. Household employers are not. I don't know if there's any of those on the call, but if you have a maid or a housekeeper and you're paying that person, you're not eligible for that. And self-employed individuals in respect to their own self-employment earnings. And here's the credit. There's two different credit calculations, a different calculation for 2020 as there is for 2021, so we'll go over each year. For 2020, the start date of this credit is March 13th, and the end date, December 31st. Your business must have been suspended, and we're going to talk about that a little further. Or your gross receipts, your revenue, must be down by 50% in any quarter in 2020 compared to the same quarter in 2019. There are some adjustments if your business wasn't open. So maybe you opened the business in July 2019. You say, well, how can I compare first quarter and second quarter because it didn't exist? There is a way to do a comparison. But your business must be down 50%. And the credit is half of the wages you pay to your employee, each employee, up to $5,000 per employee. So if you have 10 employees who got paid at least $10,000 each, your credit is 50%, so you get $50,000 on 10 employees for 2020. For 2021, again, the same conditions, suspended or your revenue must be down, but for this year, your revenue only has to be down 20%. And the look back is the same quarter in 2019. So you get to compare this year against a high year in 2019. The benefit there, your credit is 70% of the wages you pay per employee, up to $7,000 credit, and it is per quarter. Now, if we look, this credit expires June 31st, so that gives us 2 quarters this year. So that is a potential $14,000 credit per employee for this year, $5,000 last year. There's $19,000 that could be just sitting there for you. The IRS is not going to alert you of this. It's something you have to know. You file it on your 941 tax return, so there's no application. You don't have to prove your tax returns or gross receipts to anyone. You have to be truthful. You're subject to an IRS audit, and your audit period is typically 3 years. So, be truthful in this. But it is a huge credit. All right, so I've used the word suspended a few times, and it is a full or partial suspension by a government order, and it could be any government, the state, county, city, local. What a full suspension is, so back when the pandemic started, restaurants were shut down, movie theaters were shut down, these businesses were shut down. That is a full suspension, no question about it. Partial suspension. We got to a point where the government said, you know what, if you're a restaurant, you can open, but indoor dining, 25% capacity. Then we got to 50% capacity. That is a partial suspension. You were allowed to open, but the government was telling you you cannot open 100% like you were before. If you had a store, you have a storefront, you sell a lot of things online as well. Your store was closed, but your online business was still there and selling. That is a partial suspension, so a part of your business. If you have multiple stores, so for example, here in Florida, restaurants, let's say your business can be open. But in California, since the Wednesday before Thanksgiving, bars and restaurants were still takeout and delivery only. They shut down inside and outside dining for entire December, January of this year, part of November. So I have a business that is in an area that's fully open, a business that's in an area that's shut down. That is a partial suspension. So there's some variations. And I like this one. The business, the IRS says, maybe your business wasn't fully or partially suspended, but a supplier was. So maybe someone who supplies my business is in a hard hit area and they're shut down and they supply me with the widgets that I sell. And my sales are restricted because I can't get supplies. I am fully or partially suspended, even though I'm not directly. So there's a lot of possibilities that you are affected by this. I did find this exception that I threw in here. The government says if you can work from home, even if you are fully, partially suspended, you're not eligible. So, for example, our business, first off, we're an essential business, so we were not forced to shut down. But back in March, we shut down our office for the most part. Everyone can work from home, so we would not be eligible for this based on the full or partial shutdown because my employees can work from anywhere. So you determined you had a loss of revenue, your business was shut down or partially, and you want to take advantage of this credit. It is for wages you pay your employees. As I said, 50% for last year, 70% of wages for this year. There are a few exceptions to wages. You can't count severance pay. Right? The name of the credit is employee retention credit, and severance is not retaining your employee. So if you did pay severance, that does not count. The government still doesn't want you double dipping. So if you receive PPP money, well, that's not your money that you paid the employees, so you can't count that. And that holds true for these others, if you're getting a workforce opportunity tax credit, or that Families First, where the government is giving you money for sick leave and family leave, that's not your money, so you can't count it for a credit. So the way I see this kind of playing with PPP is, let's just look at 2021. We started this year, your business is down. The PPP just opened, and you file, and let's say February 1st, you get your PPP funds. The PPP funds, you are using an 8-week spending, which means your funds are going to last you February and March. So that means for the employee retention credit, I would say my wages for January, I'm going to take the employee retention credit. My January wages. Then I got PPP for February and March. Those funds run out for payroll costs. And then April, May, June, so the second quarter, I am back to taking the retention credit. So I can potentially have a $7,000 credit for January and then another $7,000 credit April or May and June in that second quarter. So just make sure you maximize everything that you have coming to you. Another way to maximize what you have coming to you, I've spent earlier this week going through all of our clients, and I'm just looking for companies that fall into one of these categories and trying to reach out to them. This is something that also has been in Congress for a while. It was being tossed around. It was called Save Our Stages. The bill never got passed, but they were able to roll that up into this the CA Act. If your business is one of these categories or similar, I didn't put the entire list of categories in here. And you had a 25% or more reduction in revenue in 2020 compared to 2019. And I suspect if you are in one of these categories, you had loss of revenue far greater than 25%. We do a lot of theaters and they just have no revenue. That's the qualification. And what you have available to you is an either or. You can get PPP or this grant. The grant process hasn't opened yet. And what I've been reaching out to these companies for is hopefully alerting them to this and not apply for a PPP. If you get that, you're disqualified from this. You'll apply on the SBA website, similar to the EIDL loan. And the grant amount is 45% of your revenue from 2019, or $10 million, whichever is less. I didn't put that in there, but whichever is less. And 45% of revenue from 2019, I'm sure, is a lot more money than what you would get from PPP. And you have far more flexibility to what you can use that grant money for. It's, they want to keep you in business. It's not just to pay your employees. I don't know if I have the second, no. There is going to be a second round of this grant that's already accounted for. I'm not sure the determination for it, but after they go through the first round money, then a business can be eligible for another 22.5% of revenue from 2019. So it's quite possible of getting up to 70%, close to 70% of your revenue handed to you. No forgiveness process. You go through an application process, and they're just going to hand you the money. All right. So I went through a lot of information here. There is a lot of information that changes on a regular basis. If you are already a client, you're probably getting a newsletter from us. If you're not, you can go to our website, paymaster.com, and if you scroll down, this is kind of towards the bottom of the page. You can click sign up for newsletter. We have a monthly newsletter that comes out, but I've been doing a weekly COVID email. I think I've done 32 of them since last March. So it's not quite every week, but just about every week I will put out important information and things that just came out that last week. So be sure you are getting that. If you are a client and you're not seeing this, sign up or maybe look in your spam folder to see if you don't have it. Here's my contact information. I am available. Send me an email. I'm happy to answer any questions anyone may have. I can't tell you how many companies I have answered questions for who are not clients. So I've said it before. I look at it as this is our community. We help each other, and just because you're not a direct client of mine doesn't mean we all affect each other here. So we're as the chamber's mission, we're here to support businesses and local businesses.
Thank you, Romeo. I think it was a great presentation.